Hello and welcome to Business Daily on Trust Television, and it's Business O'Clock, and we are set to give you updates backed by factual analysis on developments in the world of business, finance, commerce, and the stock market is not left out. I am your host, Christiana Amodu Otinya. Thank you for joining in on the program today. First, we'll begin with the headlines. NAIRA redesign, money supply hits all-time high of 50.5 trillion naira. And in public finance, the World Bank says petrol, electricity subsidies hurting poor Nigerians. We'll bring more updates on these stories for you in the Business Roundup segment of the program. However, we'll take a short breather. When we return, we'll go into the stock market and see what's happening in that sphere. Please stay. Welcome back. Now let's go straight into what's happening in the stock market. Look at buzzes from around the world. We'll begin from Custom Street, talking about the Nigeria Exchange in Nigeria's commercial hub, Lagos State. Now we saw the Nigeria Exchange finish in positive territory, up 0.60%, as the all-share index benchmark ended at 44,662.96. Now we are seeing this growth come on the day that we saw the MPC, the Monetary Policy Committee of the Central Bank, raising the MPR by 100 basis points. We're seeing the stock market, of course, shrugging off those concerns. And there's, like the CBN governor rightly stated, Godwin Emefiele, said that this is a moderate tightening, as we have seen the CBN has been aggressive, especially in past meetings, with raising MPR to help rein in inflation. And this is not just peculiar with the Central Bank of Nigeria. We've seen central bankers across the world try to bring down inflation that has been stubborn for some time back. Now inflation has become the name of the game, and we're seeing all economic managers trying to see how they can bring some kind of stability back into the system. On activity levels, we saw a total volume of 126.56 million shares valued at 3.85 billion naira change hands in 3,383 deals on the floor of the Nigeria Exchange. The equity cap ended at 24.47 trillion naira. Let's go over to other markets in Africa. Of course, the JSE and the Ghanaian bonds. For the JSE, we are seeing a positive open in Johannesburg, up 0.39%. That market started trading at about 9 a.m. Nigerian time to settle at 72,526. Now, domestically for South Africa, the focus remained on the worrying financial situation of the power utility Eskom and the ongoing load shedding. Recall that Eskom, the power utility of South Africa, has been in the eye of the storm for some time now. A lot going on with how the power situation in the nation can return back to where it used to be, at least to bring in stability in the power supply sector. There's been a whole lot of load shedding happening with Eskom. Also, on the data front, traders will closely watch CPI figures for October due in South Africa, and this could influence the South African Reserve Bank monetary policy decision, which is due on Thursday. Let's go over now to Wall Street and see what's happening in the United States. What the sentiments are like. Now, it's a sea of green now for markets in the U.S. The Dow Jones Industrial Average, the S&P 500, and the tech-heavy Nasdaq Composite all finishing in green zone. Now, U.S. stock features marginally higher on Wednesday as investors looked ahead to the Federal Reserve meeting minutes for clues into the pace for future interest rate hike. Now, the Jerome Powell-led Federal Reserve in the United States is not slowing down. We saw the last hike come at 75 basis points, and that's the hike with the last hike for the United States. And the Fed is saying it's going to do all within its confines to ensure that it brings down inflation. And inflation, it's reacting to this decision coming in from the Fed. Inflation, the last inflation CPI figures for the United States, 7.7%. And we saw how that brought about a sea of green for markets all over the world, saying that inflation is beginning to taper in the United States. Let's go over to the European Strait and see what's happening happening in the Eurozone. Now, we are seeing the positive sentiment still spill over into European markets. Now, the FTSE 100 in the UK up 0.27%, the CAC in France up 0.24%, and the DAX in Germany is up 0.10%. So these markets are opening largely in the green territory. Investors shrugged off fears of further lockdowns in China after the country reported its first COVID-19 deaths since the month of May. Traders are focused on some strong earnings reports and the bet on the likelihood for an easing in monetary policy from the Fed going forward. Going to the Asia-Pacific region, now shares in the Asia-Pacific were mixed after U.S. stocks climbed overnight. We saw the biggest rate hike in the United States. I was talking about what's happening with Federal Reserve Bank. Now, Singapore's latest inflation data showed some easing in October on an annualized basis. The Nikkei 225 in Japan up 0.61%. In the mainland China region, the Shanghai climbed 0.26%, and the Kospi in South Korea is up 0.53%. So we are seeing some positive sentiment in the markets, especially for the week. The midweek trade, it is also expected that this should also spill into midweek trade. That's bearing unforeseen circumstances, and there's really no shockers coming in from central bankers or on the front of economic data that the markets, of course, follow closely. Let's go over to commodities market and see what's happening with that chart. So it's a lot of greens here on this chart. Unfortunately, we are seeing cocoa staying as the red one here, the prodigal commodity here on this list. Cocoa is down 0.25%, trading at $2,381 per metric ton. However, for other commodities here, the arrows are all pointing in the upward trajectory. Gold, the bullion, the yellow metal is up 0.27% at $1,744.86 per ounce. For Brent crude, the international benchmark for crude oil, of course, up 0.72% at $88.99. Now, for the oil markets, we are seeing a lot of focus, especially what's happening with the COVID-19 in China. And there's also issues around the European Union ban and the G7 price cap on Russian oil. So that's what we are seeing investors in this trade really monitoring for what's happening with all of that. Now, both benchmark contrasts, they rose about 1% in the previous session as the United Arab Emirates, Kuwait, Iraq, and Algeria reinforced comments from Saudi Arabia's energy minister that OPEC Plus were not considering boosting oil output. Now, OPEC Plus meets to review output on December 4. So we expect more policy statement from the oil cartel as to what to expect, especially a focus for the market as we go into the year 2023. For agri-commodities, palm oil and wheat are staying significantly higher, 1.92% up there and 0.62% surge for wheat. For silver is doing $21.26, up 0.87%. Let's go over to the cryptocurrency markets. This market has been in murky waters for weeks now, and we're seeing that Bitcoin is reversing and entering into positive territory, up 2.57% at $16,547. For Ethereum is at $1,164.24. Now, the cryptocurrency market has lost more than $1.4 trillion in value this year as the firm failed project saw a liquidity crunch exacerbated by the fall of FTX, one of the world's largest crypto exchanges. But we are seeing the markets getting into a rebound territory, hence why we are seeing these percentages here quite going into positive and staying in the green zone. So those are numbers we have to crunch for you on the program today. So we hope the markets will continue to monitor what's happening, especially on the economic front. It is said that the stock market is the barometer that tells the health of an economy. We're seeing that the Nigerian stock market, the NGX, the Nigeria Exchange, is staying largely positive. Of course, as the economic decisions come in from the economic managers, the market also has its way of reacting to those decisions. That's the much we can take from the market. However, let's quickly take you through the business roundup segment where we'll bring you stories in the world of the economy.
Money supply, known as M2, has risen to an all-time high of 50.58 trillion naira in October 2022 as the Central Bank of Nigeria, CBN, redesigns 3 of the current banknotes. Data from the CBN website show that money supply, which is the total stock of money circulating in an economy, rose by 21.97% year-over-year from 41.47 trillion naira in October 2021 to 50.58 trillion naira in 2022. The year-to-date money supply increased by 12.17% from 45.09 trillion naira in January 2022. Money supply consists of quasi-money, currency outside banks, and demand deposits. A breakdown of the money supply from the data shows that quasi-money, assets that are highly liquid and can easily be converted to cash, went up by 10.42% year-to-date to 29.25 trillion naira in October of 2022, compared to 26.49 trillion naira in January this year. Currency outside banks increased marginally by 2.16% year-to-date from 2.78 trillion naira in January 2022 to 2.84 trillion naira in October of 2022. The World Bank has said that subsidies benefit only rich households and reduce government spending on poor Nigerians. This was contained in a statement on the bank's website announcing the launch of the new Nigeria Public Finance Review report. According to the bank, Nigeria's resources had been consumed by inefficient and regressive subsidies on petrol, electricity, and foreign exchange. In addition, the subsidies were far more than what was spent on education, health, and social protection in 2021. It further noted that Nigeria had one of the lowest public expenditure and revenue levels in the world, undermining the government's ability to improve service delivery.
And that's the roundup of business stories. Our focus on the program today is, of course, we're looking at the post-MPC decisions. We will be analyzing the outcomes that we saw coming from the 288 MPC meeting and the last MPC meeting, as a matter of fact, for the year 2022. I have in the studio with me Professor Mike Obadon. He's a member of the Monetary Policy Committee of the Central Bank of Nigeria and also a non-executive director at the CBN. We will be discussing together the outcome of the November MPC in Nigeria. Hopefully, we'll also be joined by Paul Alaje, lead economist at SPM Professionals. He will also be giving us thoughts on the decision. Hello, Prof.
Thank you very much. It's my pleasure.
Prof, I want you to quickly speak to just briefly this question. Now, the CBN governor, I was listening to him when he was reading the communique yesterday talking about the decisions, and you were in the room. I want to get what resonated with members that we are now seeing somewhat of a dovish stance from the MPC, because the CBN governor did tag the decision, the 100 basis points raise that we saw, as a moderate tightening from the MPC.
Thank you very much. I think one primary motivation for the current monetary policy stance, which was announced yesterday, is the fact that we have begun to see the good effects of the policies to tame inflation since May, when the further tightening stance was taken. And you saw from May, the rate of monetary policy rate increase was upwards.
Yes.
From 100 basis points up to 150 as at September. But we've now, from the data, on inflation trends, it was observed that the rate of increase of inflation month to month has begun to decelerate. Mm-hmm. And for example, in August, the rate of monthly inflation was 1.8%. In September, it was 1.4%. And in October, it was 1.2%. That is very good news for us, indicating the effectiveness of the monetary policy actions since May. And importantly, that price development, is responding to the monetary policy actions in a positive way. And we also took cognizance the fact of the growth position, economic growth position of the economy is very fragile.
Yes.
Even though it was 3.54 in the second quarter.
Of 2020.
With the global and domestic headwinds still waxing strong, it's very likely that the growth rate of the economy in the third quarter may be much less than what we saw in the second quarter.
Okay, Prof, I'll hold you on that thought and we'll take a short break. When we return, the conversation will continue. We're just punching on the brakes now, but when we return, you get to hear more from Professor Mike Obadon, Member Monetary Policy Committee of the Central Bank of Nigeria. Please stay.
TV, documenting the Nigerian story.
Welcome back and thank you for still staying there with us on Business Daily. If you're just tuning into the program, of course, this is where we'll bring you all the updates in the world of business. And today we are focusing on the MPC for the month of November. 100 basis point increase there from the Monetary Policy Committee. Of course, the CBN governor did say that the MPC is staying on the path of caution, so the gains that have been achieved over the years is not reversed. So a loosening was not in sight, as that will reverse the gain that the MPC and the CBN have seen that it has achieved, especially with regards to reining in inflation in the country, which is currently at 21.09%, according to the last report from the National Bureau of Statistics. Now, our correspondent was at the CBN headquarters for the MPC meeting, and here are excerpts from that meeting. Take a listen. Okay, we'll bring that to you subsequently. I still have Professor Mike Obadon with me here in the studio. He is a member of the Monetary Policy Committee of the Central Bank of Nigeria. And of course, who best to speak to policy decisions like someone that was in the room when these decisions were being made. Now, Prof, you rightly mentioned that a lot of factors were considered for the MPC to arrive at the 100 basis point increase now. And we have seen comments that have trailed the increase because a lot of speculators or economic watchers thought we're going to see a hold come from the MPC. However, I want you to speak to what are the expectations from this raise that we have seen coming from the November MPC?
Well, number one is that considering the fact that the monetary policy stance is still tight, even with the reduction in the rate of monetary policy rate increase.
Yes.
We expect that with the monetary policy actions being implemented now, with the MPR being at 16.5%, the various supportive interventions,
yes,
then the cash reserve requirement instrument of being left at 32.5%, and other administrative tightening measures still being implemented. And of course, with complementary measures from the fiscal authority, we expect the rate of inflation to gradually be declining, both on month and year-on-year basis. And so the primary purpose of the monetary policy actions is to tame inflation and then provide a strong basis, good basis for economic growth, because high rate of inflation undermines growth. And we also expect that once inflation begins to reduce, and it reduces to perhaps 12%,
yes,
then it will be conducive to Nigeria's economic growth rather than being detrimental.
Prof,
and to the yes.
Talking about a 12% reduction, we're currently standing at 21.09%.
Yeah.
That's according to the National Bureau of Statistics.
Yeah.
Some experts have postulated that inflation is stubbornly fighting back the decisions that we are seeing coming from the MPC. And like I mentioned in my opening statement, we're not seeing this. The inflation challenge is not just peculiar to Nigeria alone. Jerome Powell, the head of the ECB, that's Christine Lagarde, we're seeing all the central bankers putting their best foot forward to fight inflation. They have postulated that we might not be seeing the much dividends from this aggressive rate tightening. What are your thoughts?
No, I'm not pessimistic like some of those, analysts or so, because if you look at the trends in the inflation happening in the advanced economies, for example, is not largely, due to factors within the economies.
Yes.
Just like in Nigeria today, most of the causal factors of the inflation we are witnessing in the entire world is exogenously determined by occurrences or happenings in the global economy. Like the US, the major challenge, just as in Nigeria, is high energy prices for them. And in Nigeria, it's even worse that we are not able to take advantage of the current high prices of crude oil and energy in the global market. Secondly, you find the Russian-Ukraine war. And that one, we don't even know, when it will, begin to, taper off, begin to reduce in terms of impact. That one has resulted in shortages of commodities, energy products, food products, and Nigeria being a heavy importer of such products, we have imported a lot of inflation from abroad. And then, of course, the lingering COVID-19 and its impact, particularly in China. China all along has had a zero tolerance policy towards COVID-19. And so that country is still locking down some parts of the economy, which means then that production, output is disrupted. And China is a major exporter of a good number of manufactured and non-manufactured products to the world. So invariably, we expect that once such exogenous factors begin to be dealt with, as desired, like the war in Ukraine, is reduced, or we have a good handle on it, then, supply chains reopened, and then COVID-19 disruptions in China, there is a good handle on it, and energy products are being exported again, food products are being exported, to the extent that those sources, triggers of inflation, if they are dealt with, it will have good impact on the economies, including Nigeria.
Prof, I want you, for lack of enough time, I want you to quickly speak on tell us how the MPC felt, especially with regards to the impact of this raise on lending and borrowing costs, especially for MSMEs and business owners?
Well, that's one reason why the Central Bank of Nigeria has development finance interventions, particularly in the real sectors of the economy and for micro, small, and medium enterprises, which access, funds, loans at less than 10%.
Yes.
Until, during the COVID-19 period, that rate was actually even reduced to 5%. Yes. So I think as of now it's around 9% or so. So it's less. It's because the bank recognizes the need to support such enterprises that funds have been provided at such rates. And let me emphasize this, that yes, there has been so much talk about the impact of the hiking rates on small businesses but in particular, that the primary mandate of the Central Bank of Nigeria is to fight inflation.
Yes, sir.
To the benefit of economic growth and to the benefit of Nigerian citizens whose purchasing power is being eroded by accelerating inflation.
Just 20 seconds more, so I want you to land on your thoughts.
Yes. So what I'm saying is that every policy option of government, Central Bank or the Fiscal Authority, has costs and benefits. Once those costs and benefits are evaluated and it is found that the benefits, potential benefits, outweigh the potential costs, then the policy is implemented. That is the case of hiking the monetary policy rate, that the benefits definitely will be more than the costs.
Thank you so much, Professor Mike Obadon, the member Monetary Policy Committee of the Central Bank of Nigeria, non-executive director at the Central Bank of Nigeria. And that's why we draw the curtains for the program today. Thank you for investing your time with us on the program. Don't forget you can catch up on all the updates making the rounds on the polity on our social media platforms. I am Christiana Amodu Otinya. Thank you for joining us and continue to stay safe.